Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer,
good morning.
Hit the pause
Ira Epstein of Clinton Associates with your morning flash update for this Thursday, the 10th of August, 2017, about 9:25 a.m. Central Daylight Time. More fear about North Korea threatening to send their missiles, 4 to 5 of them, encircling Guam, not attacking necessarily Guam, the country itself, but circling into the water. Japan's come out and said that if they cross their territory, their air rights, they might shoot them down. The U.S. and South Korea, their alliance, getting ready for more war, if you will. And a funny thing out of it all is, what if the THAAD system works? That sends a message very strongly to all of our allies, get this THAAD system on. What if it doesn't work? Big problem. Just giving you some of the things that are going on through this. Now, the stock market reacting in a negative way, in part. It's also looking at earnings that are coming out and finishing up at this point. So we're getting a mixture of that. The fear bid is in place into the gold. Silver's exploded into the upside as well. When you come over to the bonds and notes, you get more of the fear bid. Look at the yen, continuing with the fear bid. So that is where you're at. I think even energy, to a degree. You know, if you get the idea of warfare going, normally energy, at least my work has shown that, gets a bid. Now, the other event of the day that's going to happen today is the USDA supply-demand report that comes out, and it's going to impact cotton, corn, wheat, and soybeans. But it's a big report, so don't just put this off to the side. This is a monster, baby. Everybody will take out their pencils, and when they see the report, you've got to go through the numbers and see, do you think it's really bullish, bearish, what's the impact? And we're also going to get numbers from South America. So it takes a little bit of time to digest it all. Be ready for that as you go through it. The dollar, been a little bit of everywhere, but a slight bid. You're down in the euro, the Canada, and the pound. The pound, as I said, going to be a hard currency to figure out with the Brexit that's going on. Smooth, not smooth. We're getting a bit of a break in the copper, which was one of the leaders in the market to the upside. It's now, if you take a look, the only metal that I've got showing there that is down a little bit. And the question is, why? Maybe it's because China won't need as much copper. You know, their import-exports that I showed you recently, while their trade balance was up, the amount of exports and the amount of imports were both down, and maybe that's part of what the market is looking at. When we come to the U.S., the PPI, the Producer Price Headline Recap, I don't see this as being all that great. It was down another tenth. They expected it up 0.2. Producer Price ex Food and Energy down 0.1. They expected it up 0.2. Personal consumption down. So I don't see anything friendly there. Jobless claims didn't go up dramatic, but they're up. Now, this is important because OPEC's projections, to me, don't look like they're in line with the EIA. First off, they say that their own numbers were up 0.5 percentage point in production in July to 32.87 million barrels a day, and that the increase was Libya, Nigeria, Saudi Arabia. Here's the parts that I question. They expect worldwide demand to increase by 1.37 million barrels over their previous forecast. I can accept that if the market is looking at non-war time and if the market is looking at the growth taking place in Europe, certainly. OPEC expects non-OPEC growth to slow, and it's lower than previous. They now expected it by only 780,000 barrels a day. This probably has to do a bit with the rig counts in the U.S. stalling out. However, what we've all seen is that as the price goes up and the EIA thinks the market is going up, what happens? American production goes up right with it. So I got my own doubts about that projection. I'm not in the same camp that they are. Now, this is real important for you, and this is probably in the stock market, and it's looking at it too. 74.4% of the economists surveyed by the Wall Street Journal expect the Fed to start its portfolio wind down in September. Some of us thought that it was only going to be that they talk about it and they're going to tell us how it's going to happen. The way that read, I see it different. A Reuters poll shows that 56% of the economists they surveyed expect the central bank to move on changing its asset purchase program in September. That's this coming meeting, which means that meeting in Jackson Hole, Wyoming at month end, where the central bankers get together, probably very important, more so than we originally thought. If they also say compared to 30% that believe the bank is going to hold off until October. So the majority, not by a lot, 56%, it's only 6% more than 50-50, think that that's going to be the case, and the rest think it'll be either December or 2018. So the majority thinks it's coming closer, and minority at the end of the year. French industrial production down 1.1% on the month in June, more than the 0.5% decline. I mention that because France is the second largest economy now there, so you've got to pay attention as to what's going to be going on in Europe and understand the impact it might have on everything. So got a good sell-off here. Metals getting a strong bid. Currency markets not going one way or the other, but all the safe havens have come alive. Now, we have the new issue of Modern Trader magazine for the September. And what they've done is they're focusing on steakhouses, beef, if you will, which we all know it's taken off all over the country. Their normal publication runs $79 for a yearly subscription. Through us, it's free, and it includes your market focus, your daily publication instead of just the monthly. You get that as well. That's what the cover looks like. And as I said, there's many changes that are going on in this magazine. Example, are you trading Forex? It's right here. Cycle traders, right here. Earnings. What about pairs trades that you might want to make, be it all these different ways? Then the different types of looks that you get on the technical aspects of charts for all kinds of markets, and of course the preferred stories that they have. Example, strangles provide a sizable yield for you options traders. One of the ways to go. Chart traders, trading the locomotive breakout. So you get all this, a free publication. I promise you, it's a lot of fun to read. And it's not just limited to this. Then there's the cool things that people are buying today. What are they doing? Not in the marketplace. Clothing, other things. Very neat magazine, taking it somewhere it hasn't been. You get it by calling us at 866-973-2077. You can, of course, go to our website at www.iraepstein.com. You'll see a carousel of free offers. Click on any of them. It'll be in there. You can come right through here. If you're watching me on YouTube, you'll see an icon. Click on it. It'll take you where you want to go. Or underneath us right here, it says click for Ira's free offers. I'm Ira Epstein. See you this afternoon, and there'll be a lot to talk about. I promise you that. Have a good day.